If you already have an FSA, I need you to be aware of these rules before you contribute to the HSA or health savings account. So FSA stands for flexible spending account. And the key word here is spending, while HSA for health savings account, and the emphasis is on savings. So you have to use the money you have in your FSA by the end of your plan year with a grace period of up to 2.5 extra months to use all of the money in your FSA. HSA, on the other hand, will allow you to contribute, save, and invest your money year over year. When Congress passed the CARES Act in 2020, they added some nice changes to the FSA. You can now use FSA to purchase over-the-counter medications. Before the CARES Act, you had to get a prescription from your doctor's office for the medication to use the FSA. This new rule is permanent under the CARES Act, not just during the period of the COVID-19 pandemic. You can even go to the local drugstore to purchase and restock your medicine and personal care items with your FSA debit card. And what's another nice thing about the FSA is that you don't have to have money in your FSA to make a qualified medical expense. So, for example, if you know that you're quitting your job next month, but you haven't told your employer yet, okay, this is kind of a shady thing to do, but you can actually use all of the money in your FSA before you finish up your contribution. So let me show you an example here. So let's say you get paid biweekly, okay, and you contribute $100 every 2 weeks, right, into the FSA, all right? By the end of March, you should have $700 saved in your FSA if you do $100 every 2 weeks consistently, right? Let's say you have an out-of-pocket medical expenses of $2,000, okay? You can actually get that $1,300 in difference reimbursed by your FSA, even though you only contributed $700 in 3 months so far. So in April, you decide to quit your job, you won't have to pay back that $1,300 to your employer, and it won't even count as taxable income. Your employer will end up eating that cost of $1,300. If you work for a company with hundreds of employees, chances are your employers would offset that cost from the unused FSA funds other employees forfeited when they quit their jobs. So don't feel too bad if you feel like you're taking advantage of your employer. But don't be one of those employees who forget to use up their FSA and end up donating their money to their employers. And I would hate to see an employee donating their money to their employer because they simply forgot to use their FSA. And according to the Employee Benefit Research Institute, workers lose $3 billion a year in FSA contributions to their employers, or lose anywhere between $339 and $408 every year per employee. I doubt that you're the type of person to want to donate your income to your employer. So be sure to use all of your FSA before the end of the year. So I encourage you to join my private Facebook group or become a member of my channel, because I have a public live stream and private group session every other Wednesday to talk about all kinds of financial independence investment and early retirement strategies. You can visit firesidechat.com/pricing or firesidechat.com/coaching to schedule your financial coaching session. And these are the different types of FSA available to you depending on your employer. There's the healthcare FSA, limited purpose FSA, dependent care FSA, and the adoption FSA. And the limited purpose FSA is the one that allows you to contribute to both HSA and FSA, but you cannot contribute to both healthcare FSA, this one, and HSA at the same time. And I'm going to get into that more in a little bit. And I'm also not going to go into details on the dependent care FSA or adoption FSA because I made a separate video about it. So just search for that video on my channel. So if you have the healthcare FSA, again, you're now eligible to contribute to your HSA, but you can use your healthcare HSA or FSA to pay for eligible medical expenses, deductibles, co-pays, over-the-counter medications, prescription medications, and personal care items. For the calendar year 2023, you can contribute up to $3,050 to your healthcare FSA or limited purpose FSA, whichever one you choose to have. Whatever you contribute to your FSA will be deducted from your paycheck. Your FSA contributions are in pre-tax dollars, so there won't be any income taxes, Social Security, or Medicare deducted from the FSA contribution. However, your FSA contributions are not to be taken as a tax deduction. You cannot claim a tax deduction for your FSA contributions because the money was not taxed in the first place. So if your annual gross income is $100,000 a year and you contribute $3,000 to your FSA, your gross income would then be $97,000. You're only taxed for the $97,000. Now, the disadvantage of having an FSA is that it comes with a use or lose scenario at the end of the year. For the calendar year 2023, the IRS will allow your employer to roll over up to $610 into the following calendar year. However, this is completely up to the employer. So make sure to contact your HR department to find out if your employer offers the FSA rollover. If not, you need to make sure you don't over contribute to your FSA where you end up losing the money. Now, if you want to contribute to both HSA and FSA, you'll need to open a limited purpose FSA, which has the same contribution and rollover requirements as the healthcare FSA. The limited purpose healthcare FSA will allow you to pay for out-of-pocket dental and vision expenses only. You will have the same contribution amount of $3,050 for the calendar year 2023. You are eligible to pay for deductibles and copays for vision expenses like vision exams, LASIK surgery, contact lenses, and eyeglasses. You're also eligible to pay for deductibles and copays for dental expenses like cleanings, x-rays, fillings, and crowns. Your FSA will also send you a debit card to make direct purchases. And you can also get reimbursed by submitting your receipts and then getting a check or direct deposit from your FSA. So the bottom line is if you use your or your spouse's healthcare FSA to reimburse yourself for medical expenses, then you are disqualified from contributing to an HSA. However, you can contribute to HSA and limited purpose FSA at the same time because limited purpose FSA is only used for vision and dental expenses. And having both limited purpose FSA and the HSA can significantly lower your taxable income. And I encourage you to get my financial independence resources by visiting firesightcheck.com/resources and join my private Facebook group by joining my private membership on the YouTube channel, or you can visit firesightcheck.com/pricing to view other coaching plans. But anyway, let's say I'm single and I make $100,000 a year. The standard deduction is $13,850. So my taxable income is $86,150. I'm not a CPA, but I want to give you some ideas on how you can save money on taxes. So if I contribute, let's say $3,850 to HSA, okay? And my taxable income is now reduced to $82,300. If I contribute $3,050 to my FSA, then my taxable income is now further reduced. My gosh, I can draw a straight line here. $79,250. Let me know if my math is off because I'm trying to do this as fast as I can. So my marginal tax rate without the HSA and FSA would put me at, 22%. That would be my 22% marginal tax rate, right? With the FSA and FSA contributions, it's going to save me 22% of $6,900. So if I multiply that by 22%, that's going to be $1,518. So I'm going to save $1,518 in total taxes. You see how I did it? But I want you to be very careful with the FSA contribution because of the use or lose rule. You don't want to contribute $3,000 and end up spending $2,000 by the end of the year, or your employer is going to take that money back to their money bag. And what I would do if I were in your shoes is go through your entire medical expenses or upcoming medical expenses in 2023. And how much did you spend on dental and vision expenses last year? Because you could use the limited purpose FSA to pay for just dental and vision expenses. And if you truly want to save and invest in your HSA, you can create what's called a sinking fund to pay cash for your medical expenses and just invest your entire HSA contributions. And I'm going to go over the HSA calculation and the calculator by age and the investment strategy in the next segment of this live stream. So be sure to subscribe if you haven't done that already.